start the show then by putting the spotlight on makeO. It's the parent of the dental tech startup Toothsi as well as the skincare brand Skinnsi, and they've raised close to $16 million in a fund round that has been led by 361 Asset as well as the investment office of Ashish Kacholia. Dr Arpi Mehta is the founder and CEO at makeO and now joins us on the show. Good to have you on board now. Just start off by telling us which are the investors that have participated, because I know that there's a number of them in addition to 361 Asset.
Thanks, Avanne. This round was led by 361 Asset Management, which is formerly IFL Asset Management Partners. They're one of the larger asset managers of the country, as well as the investment office of Mr. Ashish Kacholia, who again, as we all know, is a reputed public equity markets investor of the country. We also saw participation from almost all of our key investors, existing key investors in this round, which includes 8 Roads, the venture capital arm of Fidelity Private Equity, Paramark Ventures, the family office of the Midlife co-promoters, and my family as well, double down in this existing round.
Sure. So what is it that you will be utilizing the $16 million worth of funds for? Will you be really expanding your geographic footprint?
Sure. So just sharing some context, we are basically a platform that's focused on providing clinical grade makeovers to every Indian in an accessible and affordable manner. Currently, we already have operations across almost 100 cities of India. Out of these, in the core cities of India, we have a pretty strong ecosystem that comprises more than 100 dental and derma professionals, a US FDA-backed laboratory, and more than 150 agents on feed that actually provide home scan services. So the capital that we'll raise in this round, we intend to sort of strengthen our presence across the next leg of 30 cities in India, thereby expanding and deepening our home scan services and also the experience centers that we will be setting up there. We currently already have almost 25 experience centers in the core cities of India. These centers provide free derma and dental consultation to customers that come in and provide enhanced treatment journey support to our existing users. We intend to double this number to almost 45 experience centers across the next leg of cities in the next 2 years using this capital.
So how many customers do you currently have, and what are the product offerings?
Sure. So as a brand, right, across the dental and derma tech solutions category, we have already serviced more than 150,000 customers in our lifetime. As of now as well, we clock in an annual revenue quantum of almost 250 crores, which means doing almost 16,000 at-home services or sessions for our consumers across largely the top 10 cities of India. Our plan, with this capital is to basically grow profitably over the next couple of years. We intend to cross the 500 crore revenue mark in the next 2 years on the growth side. But there is also very, very strong sense of profitability in the business. Our idea is to get to an EBITDA profitable number or break even by March 2025.
And tell us overall how many dental professionals you have. Is it consisting of orthodontists, in-house dentists on the platform for Toothsi?
Sure. So we have a pretty expansive ecosystem right now. It comprises almost 100 plus in-house dental and derma professionals. That includes orthodontists, dentists, dermatologists. It comprises a network of more than 500 partner dentists that we have associations with across the country. We have a US FDA certified laboratory, which is the highest hallmark of credibility in the aligner technology industry for our lab that allows us to almost ship out more than 1 lakh aligners every single month to our consumers. Besides that, we have a network of almost 25 flagship experience centers in the core cities of India. And this is essentially the ecosystem that we currently operate with to provide services to our consumers. Our plan with this capital is to essentially increase this ecosystem or strengthen this further ecosystem across the next 30 cities of India. I think what we intend to do is really double down on our value proposition to consumers, right? That is providing the best of both at-home convenience that a consumer wants, plus expert access through our experience centers at all times.
Now, there are a lot of well-established players within the skincare as well as in the dental care space. So how do you really plan to take on competition, penetrate what is already a fairly crowded space?
So look, as a platform, we have a fairly wide range of solutions or services across dental, cosmetic, dermatology, and the hair removal categories. And therefore, in an indirect sense, you could say that, we have a wide range of competition, right? So the competition would range from, say, the mom and pop dentist or orthodontist. It could range to other clear aligner brands. It could be your cosmetic dermatology chains, or it could be your razor brands, hair removal brands, for all you know, right? Having said that, we have a very unique approach to building the business and the platform. I don't think there is any direct competition platform that really provides the 360-degree host of dental, derma, and hair removal solutions in the manner that we do, which is home services coupled with services at our centers at all times. So we actually have a phenomenal level of confidence in this industry, which is the clinical makeover or the clinical beauty industry. And we know that we are approaching the problem set in a 360-degree manner, right? Providing digital, online, as well as offline solutions to our customers to provide the highest standards of quality of treatment, but in an affordable and accessible manner.
Now, you spoke of achieving that 500 crore rupee revenue over the next 2 years to become EBITDA positive in the next 18 months or so. How do you plan to really achieve that?
The idea there, like I said, is in the top 10 cities of India, we will strengthen our experience centers. We will move from 20 experience centers that we have right now to almost 40 in the next 2 years. That will allow us to obviously increase the customer experience that our existing users have, but also acquire newer customers who would want to trust a brand that has physical expert access at all times. We also plan to expand our geographic footprint across the next 30 cities of India, building in on home scan services there. We currently have laser hair removal as well as clear aligner technology as our hero offerings. But in the recent months, we have also been scaling up some of our newer offerings, which include acne treatments and solutions, anti-aging treatments, teeth whitening treatments, and so on. So we will be expanding some of our offerings across India. In the last year, we also launched operations in the Middle East, in UAE as well as Saudi Arabia. And we're currently exporting our aligner products there. Our US FDA certification allows us to leverage this and provide or export aligner products to countries outside of India. So we will continue scaling up our international operations as well. In the Middle East, we will actually become profitable in the next probably 6 months. And we anticipate that in the next 1.5 years, it will contribute to almost 15% of our overall company revenues. So that's our roadmap to getting to our revenue, our target revenue growth in the next couple of years, but also doubling down on profitability and getting to an EBITDA break-even in the next 15 to 18 months.
So there were some reports as well that indicated that there was a layoff of about 20 to 30 employees in the month of May to extend the runway because there was a delay in the fund round. Can you just clarify, will there be more layoffs?
In terms of layoffs, etc., I think we all are aware that, our company, just like most other startups, continues to focus on or have a very high focus on profitability and efficiency, right? So as part of our efficiency exercise, we do take steps or make efforts to ensure that we are able to grow and churn out revenues with as lean a team as possible. So we've done whatever was, part and parcel of basically getting profitable growth over the last 1 year, and will continue to do that over the next couple of years. So I think, your layoffs, etc., would have just been a part of our focus towards getting to profitability. Yeah.
And you've got brand ambassadors like Anushka Sharma and Virat Kohli. What are your overall ad spends? Are you worried that you're spending maybe too much when it comes to ad spends?
Sure. So look, we're in a category where investment in the category as well as the brand is obviously critical and important. And we have partnered with uh, eminent brand ambassadors like Virat Kohli as well as Anushka Sharma to basically help us do that. And that has actually helped us get a very, very large market share in the categories that we operate in today. So yes, we do invest in category creation, etc. Having said that, these are very efficient and our marketing spends continue to get more and more efficient with time. Over the last 2 years, we've actually doubled our efficiency on the marketing or the customer acquisition side as well. And that happens because we not only invest in brand, but we have a great product at the back end and we have a vertically integrated platform that really allows us to sell the product to the consumer in an affordable manner while still maintaining stellar margins. So from an economics perspective, we have already managed to get to a contribution margin positive level across each and every one of our categories. So we continue to do that. We continue to focus and double down on efficiency. And our plan is to basically get profitable growth, continue to get the profitable growth through the avenues that we already discussed. And we'll soon be EBITDA profitable in the next 16 to 18 months on the basis of this.